slide. To the next slide. All right, so this is something for my people who got here to make some quick money, right? Maybe you saw you can make $1,500 under 2 hours of work. Like, I need that. I need that. Maybe you saw $10,000 from an annuity. Stay down, that one we're not going to talk about today. But for my people who are like, maybe you have a client who thinks the same way you do. They want instant gratification. Can we agree America runs off of instant gratification? So it's so normal that this sounds like foreign language when we talk about delayed gratification. It's okay. Instant gratification means that your clients get a fast turnaround of approval of their coverage. I'm talking you can submit this application right now and you can have the payment drafted tomorrow. Right? You can have the payment drafted, but then that means if your payment gets drafted, you get paid faster too. Yeah. Okay? So Amazon, why did they take everybody else out the game? Not because they were selling books. Not because, exactly, they understood convenience. They understood that if we solve for people's emotion, their impatience, then we'll be able to have a very successful business. Does that make sense? Yes. Okay. So people pay more for faster service. By a show of hands, it's all okay, right? I promise. If you have Amazon Prime in here, raise your hand. Oh yeah. It just makes sense. It just makes sense. It's a lot of sense. And we don't even think about it anymore. It's like, oh yeah, I'm gonna see what's only on Amazon Prime. It only makes sense, right? But guys, this is what we're talking about. We're not talking about IULs today. We're not talking about infinite banking. While they are very, very phenomenal tools for people to leverage, you might have that market that just didn't know about it. Keep helping those clients. But guys, at the end of the day, we are life insurance agents, yes? Mm-hmm. Or yes? Yes. We are life insurance agents. Guys, somebody becoming a life insurance agent, they took their life insurance license test once, right? They ended up offering my aunt a life insurance policy. And I just found out yesterday it was with one of the carriers we have. My aunt ended up making me a beneficiary in her life insurance policy. And if you guys remember when I said in my story, I hit a roadblock in college, had to start paying my tuition up front. It's because my first 2 years were paid for by my aunt's life insurance policy. I didn't know until I was 18. I had no scholarships, no loans, no grants, but because someone sat down and just sold her a life insurance policy. I don't know if it had infinite banking or not, but that benefit paid me $36,000. I did not have to pay taxes on, did not have to pay back ever. So keep it stupid simple. That's what KISS means. Keep it stupid simple. Love. Make sure you give people an opportunity to change not just their lives, but their downlines' lives, right? Their heirs. It was crazy. We were just reminiscing on all this stuff yesterday, watching these home videos at home. I'm like, this person literally changed my life. Because if it weren't for them, I wouldn't have been able to go to my dream school. Like I declared into A&T literally because of drumline, but I'll digress. But I was like, I just need to go there. I need to go there. So that made it possible. But guys, think of stewardship as how you manage what you've already been trusted with. You have a life insurance license. You don't have a Series 6. You don't have a Series 7. You're not competing with the stock market. You're not competing even with people's jobs sometimes. You're giving them an opportunity to change everything. Potentially. We're going to move on to the next slide. So what does this look like? If you tap it, like, count 6 times. Y'all know we have 2 sides to the world, right? You have 90%ers and you have 10%ers. Marcus, if you were building a house, right, and you're having a foundation, do you build that foundation on concrete or sand?
Concrete.
So, Kiana, why does majority of America build their foundation on sand?
They don't be listening.
They don't be listening. So when we talk about building it on sand, right? Everybody knows the 3 ways money grows, yes? We know the stock market is what type of account? Variable. So as soon as I get my big girl job, they say, Ricarda, sign your name on this dotted line. You will get a 401k. If you tap it one more time, or you get a TSP. Tap it again, or you can go into ETFs. And if you tap it again, I could get a Roth IRA. But as we know in variable accounts, you go through the ups and downs of the market, right? So if I'm already not making any money for long term, I'm going to just put my money in the stock market because it'll grow long term. But who actually does that? Not many people. Like, not many people actually just let it sit. They're going to try and touch it or whatever they got to do. So if we click the next button, then I want to start getting into my home. I want to start maybe getting rich off real estate. I want to be a first-time homeowner. Then you click on the next slide, the next tab. Then you start building our savings, emergency funds, right? Rainy days, click on it again. But as I'm getting older, guys, I'm getting married, I'm having kids, I'm getting closer to my demise, I start thinking about life insurance. When 10% of the world understands, you click it again. No matter how old we are, we're going to accrue assets, we're going to accrue debts. So life insurance is the foundation of concrete. This is what you build it all on. Then you click the next one. Now we start thinking about our savings. Then click the next one. Now we start thinking about our home. Click the next one. Now that I've had the money set up as a protection, the money that I am willing to put at risk in the market, I can willingly. And you click it 4 more times. So you have the same accounts. Do we understand the difference here?
Yes.
You guys have a fiduciary responsibility to get people set up in the right financial foundations. So let's help flip the script and change the 90 to 10, yeah? Okay, awesome. Go on to the next slide, please. So y'all can go ahead and take a screenshot of this. I'm not going to keep it up long because we'll break it down in a second. I'm going to break down something else too. But let's say you're somebody who's like, look, I want to hit MD my first quarter. Or you want to hit MD by the third quarter, fourth quarter, second quarter. It doesn't matter. Because we have people, literal examples in this office that have done 70 apps in a 60-day period. And a lot of them came from these. Some of these are some new weapons of choice too, because these carriers, guys, they kind of work for us. They're looking to give us products that are going to help the communities they're actually looking to tap into, which is us. So if we look at this last corner, right, be careful. There are certain carriers where you can say, oh, I want to try this out. Or I want to be the person in my bake shop that knows how to do everything. Or I want to do this, I want to do it. And like, it's not a bad thing. Like, yeah, be independent. Oh my God, be independent. Yes, ILO. But you got to keep in mind how they work. Nationwide is a fully underwritten company. Not saying don't write them, just be mindful. Pacific Life. Let me see. Through. Yeah. Okay. All right. What's the average time that you had somebody paid out from Pacific Life? Like how long? 2-3 months. But it was a good service. It just took a while, right? It took a while. So you could maybe go to a term that's strong for healthy clients, super healthy clients. Then you have F&G. Fidelity and Guarantee was actually the company that my aunt had. And she had living benefits with it. So when she was diagnosed with breast cancer, it paid her out from 2009 to like 2017. Yeah, saved my family like almost $2 million. So better for experienced agents, they do have a slower issue. And North American, this is a sneaky one. North American is very sneaky, but they also require nearly perfect health to go ahead and get it issued. I just had, Bocar had submitted one for a client I had in North Carolina, and it got approved the next day. Like, it was pretty cool, but don't bank on it, don't bank on it. All right, we can move on to the next slide. So breaking this down, y'all. If somebody could drop it in the group meet, that would be awesome. So you guys see these highlighted areas? The circles, yeah? Y'all gotta talk to me. This is gonna be
Yes, we got you.
So these circled areas are telling you step by step how to go and access a carrier. Because we don't get paid to teach y'all about products. We don't mind. That's why we have Saturdays for products. But you guys have to keep in mind, you have a license that you can use and go to trainings. And actually, they have weekly trainings just to teach you about their carrier, just to teach you about the underwriting, just to teach you about how the products work. So take advantage of all your resources. Does everybody understand how to access this? Yeah. And you don't even have to be licensed to go to the website. You can look at brochures and stuff as well. But get licensed so you can see the agent side. We move on to the next slide, please. So go ahead and take a screenshot of this. Because as you're working with these new types of products, maybe you've never written them before, you're going to see a lot of words that you might not be familiar with. You have simplified and you have accelerated. Does anybody know the difference before being here today? No? Okay, awesome. So this is going to be a diagram pretty much telling you the basics of it. What it requires when you're going to submit the application. Does everybody understand this? Yeah? Okay. We can move on. Wait, everybody get their picture? Okay, great. We can move on to the next slide. So, National Life Group. We have a Rapid Protect IUL, which is the new kid on the block. Personally, one of my favorites right now. The Rapid Protect is an instant decision. I'm talking like not even really 5 minutes even. Like, it's probably instantaneous. As soon as I put my client's information in, it tells me if they're approved or denied. Now, this isn't somebody you want to put anybody willy-nilly, right? You still want to have multiple types of health confirmations that they're okay. But simplified issue means that it's pretty much just straight to the point. They get approved, they get issued literally the next day, and then they get drafted the following day. So if you're looking for paid points, Rapid Protect is phenomenal. But it's not the type of people you want to put in that are solving for only infinite banking. These are people who value life insurance as well. Because you're going to get a higher death benefit, meaning the cost of insurance is a little bit higher too. So don't just go into a product because, oh, Ricarda said it's easy to go through. No, you gotta understand these are the questions you ask on after hours or to your MD, okay? Everybody got it? Yeah. Then you have the LSW term. The LSW, does anybody know what LSW means? Like stands for? Life of Southwest. I heard all my MDs say it. Yeah, because we see the difference. Life of Southwest is a whole different tier than New York, you guys. So if you see NL, that's national life. That means it's New York. So don't ever put in the New York thing. But LSW term has accelerated underwriting, easy conversions later. So for my people who want to get a term because they only have a really small budget, and then they want to convert into a permanent policy, awesome opportunity to go into that one. Great for volume and for quick paid points. That's like the type of policy you go in where you're like, oh, this person's putting in $100. I know for a fact I'm getting paid 1,200 points. Make sense? Okay. Then you have basic secure fixed UL. I personally don't write this one, but I've heard people have really good success with it. It's a simplified underwriting, gets approved very quickly. It's a lower premium, so it's a lower cost of insurance. And then it's a good filler product for people with tougher health. Go ahead, Brian. For the Rapid Protect to really work at its full capacity, yeah, but I mean, people go in there with $50, and that's annually. Yeah, that's annually. All right, any questions here? Okay, you guys see in this little corner, the NLG agents? This is an app that you can use to track all of your business on National Life Group. And with that, you can access quotes too. So if you have people for any of these three products, those are the only ones I would really recommend doing the quotes for. If you're cooking up a flex life, please do not do it on the app. Makes you know better than Ethos. We can go on to the next slide. Okay, Mutual of Omaha. Who's written anything with Mutual of Omaha?
Let's go.
I love it, I love it. Who's written National Life Group?
Yeah.
Okay, all right, so Mutual of Omaha has a Term Life Express. They have accelerated underwriting. You guys know the difference now. A very, very fast issues product. And then you also have the IUL Express, simplified or accelerated, depending on what your client does. So if you've written anything with Foresters, it's kind of like medical and non-medical. They're just going to ask for more questions. It's an easier approval than other IULs. Now, hear me out. Do not just jump to Mutual of Omaha because it's an easier approval for IULs. It doesn't mean it's going to be structured to the best of its capability with values as well. Okay. Then you have Living Promise. Who's written the Living Promise? This was personally my favorite when I got started in this industry because when I thought about life insurance, guys, I was the wrong age, wrong color, wrong market, no experience. So I'm like, I'm gonna just talk to the old people. I said old. I had a low identity then. But yeah, seasoned. Because to get a final expense, you have to be 45 years old, all the way up to about 85. Between 45 to 80. Sorry, Aaron. So for the final expense, you get an instant approval as well. You get smaller premiums and the Quick Quotes app. This is also a super, super easy opportunity for you to get quotes. And this is somebody that you could literally submit an application in 5 minutes in order to do it. Like Manny, we be doing it on the phones, right? Right on the phone. No, you need to log on Zoom. I can FaceTime you, we can be on the phone. We're good. We can move on to the next slide. Foresters. Strong foundation term. Who writes Foresters? Has anybody leveraged the member benefits? Like if it's for community events, competitive scholarships? Okay. We need to get some more hands raised up because it's like a free bang for your buck. With a strong foundation term, you get accelerated underwriting, a simple conversion, just like the one with NLG, but that's easy to convert into a permanent policy with Foresters. Smart UL, some simplified cases, I honestly wouldn't say to go straight to a Smart UL if you're solving for cash. Probably Rapid Protect would have better values, not probably, it's a fact. Rapid Protect has better values in my opinion. No, numbers. Numbers don't lie. It's not as fast as NLG or Mutual of Omaha, but it's still workable. Then plan right, final expense, same scenario, 45 to 85. They have a true simplified issue, a very fast turnaround. You also have a higher approval even with health issues. This is for people who maybe have diabetes or they had cancer multiple years ago. They're going through remission. Like, I've seen some crazy things. Cardiac arrest, like 2 years ago. You can get approved with Plan Right. Then you have the Quick Quotes app. Super, super efficient. And I believe if you were in Gina's training, you would have already downloaded these apps. But if you don't, go ahead to your app store right now and search up Forrester's Mobile Quotes or Mutual of Omaha Quick Quotes so that you can have it in secure on your phone. We can go on to the next slide. All right, so you guys, I have TTG's 2026. TTG stands for Train to Grow, okay? 2026, stewardship goals is a culture. Like, you need to be focused on stewarding, like we said, the things you already have. So what does this mean? It means you actually study the product. You know what you're doing when you're sitting in front of clients. And if you have any type of like no confidence there, you still get butterflies, that's okay. But you want to be prepared when you're going to meet with people. So regardless of what these products do, show up to the meetings with an intention that you're going to solve someone's problem. Show up to the meeting with the intention that you're going to change someone's entire life potentially as well. Preparedness is the standard. I will never forget when I was getting into IULs and I'm like, I'm 19, 20 years old. And Chris told me I would sit in front of a guy who was probably in his 40s, 50s, and he's just sizing me up. Like, what you gonna teach me about money? Y'all, believe it or not, I have never had an experience like that, where someone didn't sit down with me or roll things over with me because of my age. Because I don't show up as my age. I show up with conviction and knowledge of this beautiful office and systems, so I was always prepared. If it was IULs, I was watching Doug Andrew or listening to Doug Andrew in the car on the way to the appointment. Before I get on Zoom, I'm literally typing up or watching these cartoons of IULs, fixed index annuities, anything that I had to do. Even if it was watching those videos that we do for the licensing. Like hearing the guy breaking them down on the board. You need to have conviction, and getting conviction and confidence only comes from hearing it multiple times. So make sure you are always prepared. Excellence is normal. So how you show up in front of people is probably how you show up in front of your kids. How you show up in front of your spouse. How you show up in front of your clients is so important. It's like if I was in your shoes, I would want someone to have the same care for me as if I was in those shoes, right? Like I'm treating you like my auntie or my cousin. Then we have accountability, guys. I was debating on if I wanted to share this story, but it is important. I had sat down with a client 2 years ago, and we were like, I reached out to do an annual review a couple times. This was for an IUL. And at the time, there was a allocation that wasn't working to the best of its capacity, but it was like, great at the time. We were expecting things, with people going into office and stuff. And basically, that client didn't get any growth. And then I was like, dang, I'm a horrible life insurance agent. I feel bad because now we're processing it. These are IULs for their kids. They want to set this up. And I'm like, what am I talking about? Like, it's not my fault because we're not here to sell them on growth or the stock market. I was able to have more conviction because they didn't lose a single penny, even when the market did drop. So make sure that you're very, very knowledgeable on the allocations you're putting your clients into. It goes further than just writing it up, but take accountability. Like, I had to apologize because I did feel like I did them a disservice in that moment. But then they were very understanding because I built relationships with them. I built rapport with them. I'm still invited to the cookouts. Pretty cool. And they're about to get another policy. They're about to get a Rapid Protect with her and the husband. So I'm like, thank you, God. But culture isn't what we say, it's what we tolerate. So what your clients have to deal with, you have to deal with. You take on that burden every time you sit down with someone, okay? We can move on to the next slide. Am I on time? We good? Okay. All right, so do's and don'ts. Do every single time you sit down with a client about simplified issue or any policy, period. I don't care if they got $5 in discretionary. We want to know what you have going on. It's a fiduciary responsibility. Does anybody not know what fiduciary means? It's okay, it's a safe space. Thank you. Fiduciary means that you have the responsibility to act in the best intent of your client. It doesn't matter what industry it's in. If it's in real estate, you're a fiduciary. If it's in life insurance, you're a fiduciary. If it's in banking, you're a fiduciary. If it's in financial advisors, you're a fiduciary. If you're a teacher, you're a fiduciary. If you're an employee, you're a fiduciary. It doesn't matter where you're at. You have to always move with integrity. But an FLS goes so beyond the surface level. We found so many different, like you don't track how much money people have in an FLS. You track their habits. You get to know, okay, is this somebody that I would trust loaning $3,000 to every month? Because I can see how they spend their money. Is it the entertainment? Is it the food that goes willy-nilly? Like everybody has different scenarios, but the FLS is super important because you're leaving money on the table, or you're probably giving yourself money up because your chargeback is destined to come around if you don't do an FLS. Does anybody not know what an FLS is or has not seen an FLS? It's okay, it's a safe space. Thank God. Okay. So everybody see what an FLS is. Dimer. Has anybody heard of Dimer? Who's heard of Dime? Okay. And then who's heard of Dimer?
Oh, I'm fine.
Okay, see, a lot of people don't know about Dimer. So this is how we solve for the recommended amount of insurance. This is what you do with anybody that you sit down with. We do it within the orientation. We do it. I've done this literally at a networking event. We pull out a napkin and I'm like, so they were like, how do you know how much insurance people need? Like you ask them how much their house is worth. I was like, we'll do it right now. On a napkin, I said, how much debt do you have? Straight up. You don't have to be scared of asking people about their life because you're a fiduciary, right? You have that conviction. But you get to know what their debt is. This is credit cards. This is auto loans. This is student loans. Anything that is outstanding, personal or business loans you had to take out because you had to file bankruptcy. Or you got let go for so many years, months, prayerfully months. So your credit cards were racked up. That's all of your debt. Because somebody, depending on what it is, will have to be responsible to pay that back if something happens to you. Or if you got sick even, somebody's still responsible to help pay your bills. Then you have income. If somebody were to pass away, it typically takes a household like 7 to 10 years, statistically, to recover from losing that income. I have a very close friend of mine who rides motorcycles, and I was just telling somebody yesterday, I was like, be very careful when you're selling them insurance because they always hear, oh my God, you're doing this scary thing, like you could die. You know you could die riding motorcycles, bro? You know you could die? Like you need life insurance. They're not going to hear that. Because my dad, he grew up and he actually had a motorcycle club. People were dying left and right. People were getting knocked off their bikes left and right. People passing away from pneumonia because they rode without jackets on. Like I have literal stories of this. So I could say it like that with conviction, but they don't hear that. So you got to know, even though it sounds common sense and logical to us, you got to meet people where they are. So I'm asking, bro, this is what you do for work. If you got sick and you can't eat, you can't work, you're not going to put anything on the table. So keep your income in mind. This is a supplement for your income, but times 10 years. Mortgage. If you have a mortgage, go ahead and put that in there for both spouses separately, because if something happens to one, the other one has to pick up the slack. Then E is for education or everything else. This is like if you want to leave money behind for your kids. I believe that was a sector that I fell into. But then you have retirement. Retirement is like, what do you have sitting in a 401k or a TSP? Because as a 401k, you can designate beneficiaries. Did y'all know that? So don't be telling people, oh, your 401k doesn't get passed down. It's not true. You can pass it down as a beneficiary, your TSP as well. But if they don't have it set as a beneficiary, take that into account regardless and always include it in the dimer. Okay? Everybody understand that?
Yeah.
Okay. Then don't try to be fancy instead of being efficient. Don't be sitting down with the client and you're like, yeah, so this infinite banking thing or like while you're going through the FLS and you didn't even get to their discretionary income yet. You found out they have $300 discretionary. Don't try to put them into 150. Don't try to put them into 100. You should only take 20%. 20% of someone's discretionary income. Not 30, not 40, 20%, y'all. Because you have to keep in mind, people are people. Who has kids? If a kid breaks a bone, what do you got to do? Pay some money. Yeah, you got to come up with some money. If a tire pops on the side, like on the side of the street, what do you got to do? AAA, prayerfully. But yeah, you got to pay for that tire if you don't got the hookup. And then if you get sick and you can't work, who has to pay for stuff? You're always going to have to put money out some way or another. So just because we take into account bills doesn't mean that everything else is taken into account as well. So you don't want to go beyond 20% of their discretionary income. But recommending products they can't explain confidently. Guys, this is as an agent. Don't bring somebody into a product that you can't personally explain.
Wow.
Yes, you want to get your nose bloody, but leverage your upline as many times as you have to. As long as
Say it
you need
again.
to. It's not because you don't, like, you're not capable. It's literally the fact that we're trying to make you money. We're incentivized to make you money.
Wow.
Would you rather get 50% of something or 100% of nothing?
Wow.
100% of
Dang.
something, right?
Makes sense.
50% of something. All right, we can move on to the next slide.
Dang,
So we have a case study.
But I'm matching.
Let me see. I'm gonna need y'all to stand up because y'all is just right.
I'm matching.
Please, y'all stand up.
Single
Go ahead,
mom,
stand up.
32, 2 kids?
Please stand up.
Wait, single mom stand up?
Yeah, stand up.
Oh, yeah, no. Everybody.
No,
Single
no,
mom?
no.
Oh, I was about to say, whoa.
Stand up, please.
I'm trying to figure out.
I was like, dang, Ricarda. All the single moms.
Left side. Okay. So left side. Does everybody know who they're standing next
Avery.
to?
Who is you?
Are they a CFT?
I had your babies? I don't know you.
Have they hit PC before? Okay, so everybody who has hit PC, I want you to find somebody that has never hit PC before.
Wait, find something.
Even if you've never hit PC before, raise your hand.
Oh.
Nice
Dang.
and high. Raise it nice and high.
Oh yeah, that's a problem. That's a leak. Sorry,
Okay.
guys.
So everybody who has hit PC, I need y'all to go and find somebody that has not hit PC. Like from my front, y'all need to go to the back.
Nah, that's your word. You ain't listen to it. You ain't even listen.
Nah, I'm not. Everybody here, y'all.
Come over and talk.
I ain't.
You talk over here.
Yeah, I'm right here. I'm recording now. Different teams. So you need one.
Where we go?
We'll say. How much you, Diamond? Let's work. Single mom, 32, 2 kids back. Works 2 jobs.
Oh, my bad, yes, sorry.
So let's say you have a single mom. Close it down, put it down. If you have a single mom who's 32 years old, right? She has 2 kids, works 2 jobs, no savings, but they have $1,050 discretionary. Their top goals.
This makes sense, though. I be getting this a
Their top
lot.
goals are building retirement wealth, pay off credit cards, and build savings for unexpected events. Which account would you put?
Opportunity. Opportunity account.
Accounts or accounts?
Opportunity account.
I'm finding sign up. Yeah, she said which account. Like, I can see multiple accounts. Like, this wouldn't just be one policy in my opinion because she got 2 kids. And it would be...
One for each kid and 2 for
Yeah, that's what I think. And then maybe an opportunity. I'm trying to see what she would say though. I'm about to see what she said.
150 small $20 per opportunity.
4 apps.
Oh yeah, OC. OC 2 kids. 4 hours.
3 volunteers. Run up to the front. 3 volunteers. Whoever wants to give the answer. Need 3 people who want to give the answer.
Wait, so accounts or accounts? Accounts, like one account. Oh, accounts.
Okay. Okay, you can go too. Okay, whatever. Yep, let's go. Let's count to 5. Okay, everybody. Okay. Everybody can grab seats. We're going to give a chance for our volunteers. Okay. So I want you guys to give your answer and then plead your case too.
Sidebar.
Okay? What? Everybody can grab seats.
Back.
What's your name, love?
Say left.
Oh, sorry.
I need to hear this. I'm sorry.
Okay, everybody give it up to Jasmine. You up in the front now, you can't be shy. Okay, which accounts would you say that you would put this client into?
Term,
She said a term,
Rapid Protect,
a Rapid Protect,
and Smart IUL.
2 Smart IUL, so you would get her a blend. Okay, why?
Smart IUL for kids.
Smart IULs are for the kids.
The Rapid Protect is for long term, and then term is for short term. So if something happens in the
I'm trying. So you said the Rapid Protect.
The Rapid Protect is her long term.
The Rapid Protect is her long term.
The term is in the event that something happens in the next 30 years.
And the term is in the event something happens in the next 30 years. Okay. Give it up to Jasmine, guys. Jahida.
Alright, so based off what you said
Can everybody hear Jahida?
Yeah.
I can talk louder, okay. Alright.
Let's go.
Alright, so 1050 is discretionary income, so times that by 25%, that's $262.50. So based off of that, I would do, of course, Smart ULs for the kids, benefits, especially going off to college and all the great things that's involved there. For the parent, I would probably do NOG, Rapid Protect, more cash value, also death benefit, and then we would talk about debt solution to get rid of that credit card debt. So that's what I would do.
Okay.
That's gas.
So I was kind of thinking the same thing as Jahar, but I was thinking the F&G IUL just dropped down the death benefit to about 100K, and then let's get her some cash growth in that policy. Let's get some smart IULs for the kids, smart ULs for the kids, and then get her a term blend to cover the rest of her dime. Then for her credit card debts, put her PHP debt solution.
Okay.
Because she's putting unexpected wealth. And
Okay.
then take an extra 200, give her an opportunity because she doesn't have the savings for life.
Okay. Can we give it up to my ladies, you guys? So what I'm gonna say is none of y'all were wrong. None of y'all were wrong. Because we're going to sit down with the same client, but we might have different solutions based on the conversation. Now I would say, be careful with the blend. Because as a blend, you typically want that for homeowners. Because right now, we don't know if she's renting, not renting, she got kids. It's like now I'm putting extra money away that could probably save me from a chargeback. Make sense? I love it. Good job.
Wait, so
All right, you guys grab seats, grab seats, grab seats.
so
All right, we can move on to the next slide. It's going to shift a little bit. I already gave y'all the answer though. So for this case, the client got more savings and more discretionary income. Even with more savings and discretionary income, y'all, if it were me, I don't want to give them any more than a $200 budget. $200 max. Even with a large discretionary income, sometimes because a lot of things have to come up, right? But you can never go wrong with starting low. Most times people don't overfund anyway. Unless they're starting at $500 a month, you don't want to bank on them putting more money in later on. Right? So this is an option. And I personally just like to keep my clients with one carrier at a time. So if I'm doing something with Foresters, I'm putting all of them with Foresters. Because they don't have confusion of, oh, where do I find this and where do I find that? Put them all with the same company. Use Foresters for the kids, for the competitive scholarships, cool. But NLG is pretty straight to the point for my clients with not as much financial gain. But yes, also an opportunity.
I was about to
Yeah.
say
Yeah.
that the opportunity.
Go ahead.
You're saying just use 20%. What if the client says, I want to put minimum 500 on?
Oh yeah, no, that's emotional.
Why?
That's emotional.
Because you want to grow well? Awesome. So let me ask you a question, Reggie. Typically when we make more money, we spend more money, right? So if we could show you how to properly allocate that money, would you be open to listening? Do you feel as though you're making all the money you want to achieve your goals right now? Perfect. So I like to do this. I want to under promise and over deliver. So we can start off in a small amount and then you have an opportunity because these are flexible accounts to put more in later. Does that sound good for you? Awesome.
That's good.
That's girl,
Because you gotta give the client comfortability that you're not having commission breath. Like I could easily put them in a $500 max funded. Get charged back. Thank you. Yes, you can get charged back. So just don't be scared, but you gotta be mindful as a fiduciary. Everybody understand that? So guys, as we're wrapping up here, I want to leave you with this because I know some people did have to leave. But if who's still in the room that wants to go on an MD run? That is on an MD run. Raise it nice and high. Raise it nice and high. Okay, so there's something called a book, As a Man Thinketh. Has anybody heard of that? I recite this every single day, whether it was me on my MD run. When I was on my MD run, guys, the world came crashing down on me. Because I made a decision,
Lord.
I came out of it.
Come on.
Victorious. I was not working in this office when I hit MD. I hit it the same month I made the decision to hit MD though. So all of what you have to do moving forward from when you make the decision is a mental game. You can get all of the policies in the world, but if you don't have the mental toughness to withstand the BS that's going to come into your life,
Right.
you may as well just not make the decision. You're not ready. You're fearful. Because if we click onto the next slide, Aaron,
Yes.
2026 is about maturity, ownership, legacy, and becoming people who can handle success. We gotta be expecting the expected, but also prepare for what you're praying for.
Come on now.
If we move on to the next slide. This one come up. Everybody can take a screenshot of this. This is my handwriting. Yeah. So how you think creates how you feel. How you feel becomes an emotion. That emotion becomes a vibration. That vibration becomes a magnet. That what is it? That actually attracts things to you, also repels things away from you.